this is a collectible coin. This is not an ultra rarity. But there are coins like this that are so rare that they go for $8 million, $15 million for 1 ounce of gold, one coin. And if you look at that index, number one, it's broken out to new highs. And that person at that elite level, well, they're likely to be either somebody that writes the rules or have the influence over those people that write the rules. And if you listen to the FDIC, what they were saying was, well, the people that are out here, the institutions that really need to understand what's going on, no problem. They have their attorneys, they have their accountants, but we don't want the general public to understand what's happening and that they will get bailed in, because then what do? You make different choices. So it is definitely the central banks, and who knows more about money and what they're doing to it than them. I mean, here, we'll play central bank, right? And every time they do this, then the money that's already out there loses more value. We recently saw it in Ghana, where they've required their gold producers to sell their central bank 20% of their gold at the local currency that has officially lost 57%, which means it's probably more than that, because desperate governments do desperate things. And personally, that's why I only buy the collectible pre-1933 coins. I had an uncle who, I feel like I've been groomed for this moment in time with all of the trading that I've had. You live long enough, you can look back and you can see it. And, when I was 10, so that would have been 1964, my parents and I were visiting him, and he said, come here, I want to show you something. And he took us in a back bedroom where he had 2 tall floor safes. And he opened the door of those safes and he said, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life by what's in these safes. So I turned around and looked. Now, I was 10. I don't think I comprehended. In fact, I know I did not really comprehend it. But basically in 1964, it was illegal to hold more than 5 ounces of gold other than in pre-33 form. You can only hold bullion in an IRA. Mm-hmm. Well, if you're holding bullion in an IRA, how easy is it to say, we're confiscating it, well, they won't use the term confiscation, but we're going to take it, but don't worry, because we're going to leave you lots of this fiat money, right? And even paying a premium, because again, they know what they're doing to the currency and its purchasing power. So let's say that spot gold, which is Wall Street's term, it's a contract, was at $3,000 an ounce, right? Yeah. And they say, but don't worry, because we're going to pay you $4,000 an ounce. Well, that's pretty much what they did back in 1933. And then after they got the gold, they revalued it to, the currency. And the currency lost a lot of value overnight. So people that don't think it can happen here just don't look at history. Whether you believe in gold or you don't believe in gold, this is the primary currency metal. And when they do those overnight resets, they take this that has no intrinsic value and they revalue it based on how much of this they've printed to the gold. It is a true portfolio diversifier. You want to take some risk? Okay. You do whatever you're comfortable with. That's what everybody needs to do. But quite honestly, have a foundation of real money that is outside of the system. Yeah. That is in your possession. Because regardless of your perception, if you don't hold it, you don't own it. So, I really have a whole mantra to it because, people will say, well, you can't eat gold. Well, you're not eating this either. But you'll be able to convert, I use silver for barterability. But you want to be as secure as possible and independent. So food, water, energy, security, barterability, wealth preservation, community, and shelter. 2011, we were downgraded from a AAA rating to a AA rating. Will they push us into that next downgrade? And if they do, there are different holders of our debt that might not be able to continue to hold our debt. And we're already seeing the lack of liquidity. That really started happening in the Treasury market in 2015. And you can only kick the can so far down the road. And unfortunately, the key tools that the central banks have are interest rates to regulate the rate and speed of the inflation. I lived through a more rapid, because I was around in 71, and I remember that high inflation and all of the turmoil. But there are also really telling signs that you see every single time that there is a currency shift. Anybody, even if you don't understand this, I think everybody can kind of see that everything just feels off and uncomfortable. You have to trust yourself. Even if you don't understand the details, trust your gut. And don't just say, oh, well, they must know what they're doing and have control. And it's that rapid inflation that has an impact on consumers, and not just consumers, but on confidence of the public. And that's the only thing that's holding it together. So because we've basically been anchored at zero interest rates, and we have this looming shift, doesn't it trouble you that nobody's talking about it? And we'll look at what Saudi Arabia did just recently by saying that, yeah, they could accept the yuan, or they could accept the ruble, or they could accept gold for oil. And our petrodollar that was created back in the 70s that enabled the US dollar to retain its position as the world reserve currency, if the oil producing nations are now actually willing to accept other currencies, well, we don't have that petrodollar anymore, do we? And we've been working toward that. We, meaning other countries, the BRICS nations, etc., have been working toward that end. That means that there's going to be a whole lot of dollars that are no longer needed, right? The petrodollar really created that market for the dollar, because if you were a government or corporation going outside of your border to buy anything, you had to use dollars to do it.